Start streaming. All right, good morning. Today is July 17th, and sorry for the few minutes delay. I had to go and get some exercise so we can practice on the statement of cost of goods manufactured, which is on page 773. Okay. Yeah. So we'll proceed from here. Now, in a retailing business, we did cost of goods sold. Okay. We did a cost of goods sold. The same thing for manufacturing business, except that you have cost of goods manufactured. And businesses also have cost of goods. I mean, manufacturing business have cost of goods sold also. So they have cost of goods manufactured and cost of goods sold. In order to do cost of goods sold for a manufacturing business, you have to do cost of goods manufactured first. Okay? So, let's see, cost of goods sold in... So look at the exercise that I just gave you, and first of all, what do you think the cost of goods manufactured should include in it?
Cost of goods
manufactured. What do you think it should include in it?
Materials.
Material. What does it take to manufacture?
You need like a land, like factory, you know what I'm saying? So then you need labor.
Labor. You said
supervision.
You said material first, correct? And
labor.
labor.
And like you got expenses, like you know what I'm saying, utilities expense, gotta pay salaries.
What do we call those altogether? Overhead.
Overhead.
Forget that, don't forget. Three manufacturing costs: direct material, direct labor, and overhead. So here, we're going to look at the cost of goods manufactured. We're going to look at material used. We're going to look at labor used. And we're going to look at, let me see if I gave you the correct, yeah, we'll do the first one, this one. So we're going to look at the material used, labor used, and overhead used. Okay? Okay. So let me go to Excel so the listeners can observe what we are doing. All right? So the first thing, we're going to put the name of the business. So tell me, what's the name of the business?
Choice Candy Company. Oh wait, you talking about a sheet? I'm tripping. Miami Enterprises Incorporated.
Say that again. Dynamic.
Bynami.
Bynami, yes, Bynami Enterprises. So we're going to put a title here. Let me. Oops. We combine some of these. Okay, Bynami, B-Y-N-A-M-E, Bynami Enterprise, etc. Enterprise Incorporated, and then we're going to put, let me also
statement of cost.
Combine those, and we're going to call statement of cost of goods manufactured. Statement of costs of goods manufactured. right. You know, okay, we'll do that, and then maybe we'll designate a problem in the book. What I should have done, I should have picked up so the listeners can also go to the textbook. But this one is not in the textbook. This problem is not in the textbook. Okay, so we'll use that as a practice. So, and then what do we put? The period. For which period is this statement?
It says at the end of the second quarter.
So this is for the quarter ended. For the quarter ended when?
I'm guessing April 1st.
April?
Or March. Or June 30th.
Which one of them?
It says they got the materials inventory, work in process inventory, and finished good inventory for April 1st on here. I don't know. So, I mean, it says second quarter, then at the end it says June 30th inventory where as follows. So I'm guessing for the end of the second quarter, which I guess is June 30.
June 30. For the end of June 30. If you take a look carefully.
I guess it's from April 1st to June 30th. That's
yes, sir.
Quarter.
April 1st. June 30 inventories were as follow. That means
Prepare to
we're talking about a quarter now.
Yeah.
So we have April, May, and June.
Yes.
3. So for the quarter ended June 30. June 30. 20XX. Okay, some year. Okay, so the first thing we're going to look at materials used. Okay, materials used.
Direct material used.
Okay, yes, sir. Direct material used. No, not that. Yes, or raw material. Let me bold this one. Okay. So how do we figure out the material used? How do we figure out the material used? We start with beginning inventory, raw material. Remember when we did cost of goods sold? Remember we start with beginning inventory plus purchases equal available for sale minus ending inventory equal cost of goods sold. Same thing here. We start with beginning inventory, raw material. So in this case,
materials inventory for April 1st.
For April 1st, how much was it?
510, 500.
Yes, sir. So we're going to say material. Let me say, let me go back here. Right, direct materials used. Okay, direct material used. And so we're going to start with April 1st inventory. Material inventory April 1st. Material inventory April 1st. That means beginning
Of the quarter.
Yeah, beginning inventory dark material, which is April 1st. Now remember, you're not going to have beginning inventory and ending inventory. You're going to have periods. Okay? You're going to have times. Maybe January and February. If it's a whole year, then you may have whenever the year started and then ending inventory when the year ended. Okay, so that's got to look at the date and you say which one is beginning, which one is ending. All right. So in this case, is April 1st is the first of the quarter. So that represents beginning inventory material. All right. So in this case, how much was it? 510.
Yes, sir. 510, 500.
510, 500. All right, and then we're going to add to that, think of cost of goods sold. We're going to add purchases. So we're going to say plus purchase. I'm going to put the sign plus so you understand. Plus, bless you. Plus direct material purchased. Direct material
purchase during the quarter.
Purchased, yeah, during the quarter. How much was purchased during the quarter?
1,105,400.
Yes, sir. 1,105,400. 1,105,400. Okay. What would that give us? It will give us cost of material available for use. Remember, in cost of goods sold, available for sale. Here we say cost of material available for use. Okay. So let me put this put a line under this one.
Okay. What about? Do we have any?
Go ahead. Ask.
Less ending materials inventory.
Well, we are not yet.
Yeah.
Yeah. So with the available for use first. Available for use. Then we will have the list. Okay. So the available for use is add those two. What do you get?
Let's see.
I know we're going to start with 1 million. 1,605,900.
615.
615, yeah. 1,615,900. All right. So from that, if you take off ending inventory, direct material, okay, take F2. It's not going to move in here, I guess. It's just going to stay here. Okay, so minus. So this is, I didn't put available for use material. Available for use direct. Direct material available for use. All right. Now, beneath that, we're going to deduct. We're going to say less ending inventory direct material. Less, or we're going to put the letter minus ending inventory direct material. In this case, which date that should be? Which date should be on the list? And make sure you read. Read those 2 lines. June 30. Those are ending inventories at June 30. So direct material ending inventory was.
540.
Yes, 540, 200. Okay, so we're going to say minus direct, okay, ending inventory, direct material. Okay, let me, how much was it? For 540,000? 200. Okay, oops. Undo. F2. I think what I should have done in this case, I should have put available for use. Let me put here text. So it won't. Okay. less, or let me say minus ending inventory direct material. It was 540,000. 540, 200, correct?
Yes, sir.
All right, so let me put a line under this one. So if you take this off, we get cost of direct materials used. So if you take this 200 out of 1,615,900, we get direct materials used. Okay? Direct material used. All right, in this case, so I'm going to put a little bit further here. How much was it? If you take 540, what do you get?
1,075,700.
1,075,700. Okay, so F2, 1,075,700. That's, so let me put a bold under there on that one and make it a little bit larger. All right, so this is material used. So you start with beginning inventory, 510,500 plus direct material purchased, 1,105,400. So the total available is 1,615,900 minus ending inventory. That will give you how much. So if we have this available, if we have 1,615,900 available, and then at the end of the quarter we only have 540,200. So that means we used 1,075,700. All right. So material used. Okay, what comes next after material used? The labor. Okay, so let me come back over here, and let me just do this and do that as a text, so we won't run into formulas. All right. So the next thing we're going to put is let me make these things kind of even. I'll leave it as it is. I should have used Word instead. Okay, so direct material used. Now we go to direct labor. Did you figure out how much direct labor used?
It was 154,800.
Direct labor used. How much you said?
154,800.
Yes, sir. Where should I put it?
Under the direct materials used.
154,800. All right. Now the third thing Let me bold this one. Let me bold this one. Is already bold. Okay. The third thing is
the overhead.
overhead. Okay, so we're gonna overhead costs. That's the third category. All right, look in this list for me and tell me what do we have in overhead. Look in this list and this list, and which one of these is overhead? The indirect material, indirect labor.
Yeah, the indirect labor cost for 16.
We start with,
The indirect labor cost.
I'll start with depreciation.
Oh, okay.
I start with depreciation. How much is the depreciation?
Depreciation is 16,200.
16,200. All right, what's next?
The indirect labor cost? No. The plant supervisor.
Supervisor salary.
Yeah.
Okay, so the plant supervisor salary. All right, how much was it?
50,600.
50,600. All right, next. After supervisor salary,
The insurance expense.
which one?
The insurance expense.
Yes, sir. Insurance expense.
That's 1,100.
How much you said?
1,100.
Yes, sir. 1,100. Next, after insurance expense on the plant and equipment,
There's utilities expense.
utilities expense. All of these are indirect costs or overhead. How much was it?
4,000.
All right, what comes next?
The indirect labor cost.
Yes, indirect labor cost. How much was that?
16,800.
16,800, you said?
So,
All right, 16,800. What comes next?
manufacturing supplies expense.
Manufacturing supplies expense, that's correct. Okay, let me pull that. Oops. All right, manufacturing
Supplies expense.
supplies expense. How much?
3,400. Well, you got 3,400.
3,400. Oops. What am I doing here? Expense. Did you say 3,400?
Yes, sir.
What other what other indirect costs include?
Small tools expense.
Small tools expense, that's correct. All right, how much is that?
1,500.
1,500. All right. What else?
That's it.
That's it. So all of these are
Overhead.
overhead. So what's the total on all of those? Tell me the total of all of these.
Gotcha. That's 109,800.
Wait a minute. $109,800 you said?
Yes, sir.
Okay, 109, 500, 600. 109, how much you said?
800.
800. All right, and let me put a line under this one too. All right, so the three of those now are called total manufacturing costs. Add those three now. Total manufacturing costs.
Those three numbers.
Uh-huh.
That's 1,340,300.
Okay. Let me do something here very fast. $16,200 plus 5,600 plus 1,100 plus 4,000 plus 16,800 plus 3,400 plus 1,500. So where did you get the 109?
You said, where did I get the 109?
Yeah.
From adding all the overheads cost
Uh, add them one more time.
That's 16,200.
16,200
Yep.
plus 5,600
Mm-hmm.
plus 1,100
100.
plus 4,000
4,000.
plus 16,800
16,800.
plus 3,400
3,400.
plus 1,500.
Plus 15. Ooh.
Hey,
Oh.
you see?
I don't know how I got that from. I'm tripping.
All right, it's all right. So,
93,000.
oops. F2,
Oh, let me change up my answer.
93,600.
Okay. Plus.
All right, so total manufacturing cost is
1,324,100.
1,324,100. These are manufacturing costs. F2. Let me go back to F2 here, and let me put a line there. Okay, so that's not cost of goods manufactured yet. Remember, if you remember, we said the cost of flow, you start with the inventory, the raw material or direct materials, and then it goes to what?
Raw materials and goes to
What do we call that in the middle?
work in process.
Yes, sir. And from work in process, it goes to finished goods. So we still have to count the work in process inventory. So we're going to add to that beginning inventory work in process. So you add beginning inventory work in process. So I'm going to say plus work in process, work in process, beginning inventory. All right, how much is it? Work in process, beginning inventory.
697,300.
Yes, 697,300. All right, so let me F2, underline that. Undo. What did I do here? We said 697, 300. Correct? All right, so it's not cooperating with me. I'll just leave it as it is.
Oh, it changed.
All right. So add that. What do you get? Add work in process beginning inventory to manufacturing costs.
Oh,
So that's going to give us a subtotal. I'm just going to call it subtotal. Subtotal.
That's 2 meal tickets.
Huh?
It's 2,021,400.
2,021,400.
Yes, sir.
Correct?
Yes, sir.
All right. Let me see if I can. I don't want to do that. And then we say minus work in process ending inventory. Minus work in process ending inventory. How much work in process ending inventory?
7,795,400. It's at the bottom.
795, 400?
Yes, sir.
Okay. 795, 400. All right. So, and the result is going to be cost of goods manufactured. So I'm going to increase the font to magic figure. Go and let me also bold it.
Cost of goods
cost of goods manufactured. Okay. Take the 2,021,400 from the previous total. What do you get from the
1,226,000.
1,226,000. 3 zeros. That is the magic figure. Cost of goods manufactured. So it has in it 3 totals. Material used, overhead used, material, labor, and overhead. 3 components. Total material used, total labor used, and overhead used. Then that gives us manufacturing costs. And then we don't want to forget work in process is part of cost of goods manufactured. So we're going to add beginning inventory work in process. It will give us subtotal. Feel free to write subtotal or just keep going without subtotal. Minus work in process ending inventory. And that will give us cost of goods manufactured. All right? Now, let me go for a second to the slides. Okay. The cost of goods manufactured is calculated in the statement of cost of goods manufactured, the one we just did. And it summarizes the flow of manufacturing costs incurred during the period. So those are the manufacturing costs. So if you're making pipes, let's say for 1 month, okay, so you're going to start with the beginning inventory, direct material, and then you see how many material was used, or train, for example. You do this formula for that. You do this statement. Start with your material, direct material. You add to that, find material used, and then find labor used and overhead used. Okay? We practiced in this exam. Yeah, we're not going to do that one.
Yes, sir.
Okay, the next step is cost of goods sold in a manufacturing business. Okay, see, we're going to look over once it's finished. Okay, so we got up to here, the cost of these finished goods. Now it's going to be sold. We're going to sell it. So in this case, you're going to start with beginning inventory, finished goods. Do we have finished goods here? It doesn't look like we have finished goods.
Yes, we do.
We do?
Finished goods inventory April 1st.
All right. Yes, we do. So, so let me go back to
So we start a whole other.
a new statement.
Is it the income statement?
No, not income statement.
I mean, that's
Cost of goods sold for manufacturing business.
Oh, okay. I mean,
Yeah.
they had an income statement. They had the cost of goods.
Ah, okay. Before we
I was looking at this. That's why they had.
first
the
do.
you just did this. This
Yeah.
is a statement of cost of goods manufactured.
Okay, and then
Then the income statement. This is what we said. Beginning, finished goods, inventory, cost of goods manufactured.
so let's do this one
Yeah.
first. Yeah.
It says that's what I'm saying. The title.
Yeah.
It said income statement on it.
But see, we are just doing section, one section of income statement.
Yeah.
This one, what I'm going to do is just one section, which is cost of goods sold.
Okay.
So we start with beginning inventory.
And,
Okay, we start with your sales minus cost of goods sold equal gross profit minus ending inventory. Okay, what am I doing here?
no,
Sorry, revenues or your sales minus cost of goods sold equal gross profit or margin minus operating expenses or cost and expenses equal net income.
operating.
Yeah. So we just want to do cost of goods sold section
Okay.
of the income statement. Yes, sir. So we start with beginning inventory,
So we put our title.
finished goods. Yes, sir. So I'm just gonna put the title. I don't need to repeat the whole thing again. So just put the title first. We know what the title include in it. So let me do this as text. So we will not. All right. So we put the title, and then we start with beginning inventory, finished goods. Finished goods. In this case, how much is it?
701,200.
Finished goods, April 1st. 701,200, correct? 7. Let me put the dollar sign.
We don't start off with the sales?
Huh?
We don't start off with the sales?
With what?
The sales.
Oh no, we're not doing the income statement. We're just doing cost of goods sold.
Okay.
Just cost of goods sold. Okay. 701, 200, correct? 701, 200. And we're going to add to that cost of goods manufactured.
Okay,
So that's why we had to do cost of goods manufactured first. Okay? And then you do your income statement, which include cost of goods sold in it, yeah. So, beginning inventory plus, so I'm going to put the sign plus cost of goods manufactured. In this case, how much is cost of goods manufactured?
1,226,000.
Yes, sir. 1,226,000. And that gives us cost of material available for sales. Okay, equal. So I'm going to put the sign equal. Cost of goods available for sale. In this case, add the two, what do you get? 1,926,200. 27. Okay, 1,927,200, correct? Minus ending inventory, finished goods. Okay? Minus ending inventory. Do we have that?
Ending inventory.
Finished goods.
Finished goods, yeah, 601,400. Yeah, it's at the bottom.
Okay. 604,100. Correct? Okay, 604,100. 604,100, and that gives us cost of goods sold for a manufacturing business. So I'm going to bold it and increase the font. Cost of goods sold for a manufacturing business. All right, how much we get?
1,323,100.
1,323,100. How much? One more time. Sorry.
323,100.
Okay. That is the cost of goods sold for a manufacturing business. Look at this for a second. Does that sound odd to you? If the cost of goods manufactured is 1,226,000,
No, it doesn't sound.
and what happened here? Why cost of goods sold is more than that?
It means you made a profit, right?
No, there's no profit here to make. We didn't look at any profit. We're just looking at the costs.
Oh, well, the cost.
Because we had some finished goods inventory. That's what makes it a little bit higher. Because of that finished goods inventory that we already have. Okay, now if you want to do your income statement, you're going to get your, I wonder if we have sales revenues here, do we?
No.
So you're going to do your sales revenue minus cost of goods sold, this one, 1,033,000 equal gross profit. Then you minus your operating expenses with the two categories if you have them. And that will give you net income. The only thing is missing is your revenues and operating. Well, we have operating expenses. Where are they?
Oh, aren't they in the overhead?
Yes, sir.
Yeah.
Yeah, we have those over there. You want to do this one too?
Yeah.
This is cost of goods sold. Okay. All right. So if we go back to the book for just a second, let me see the slides. See what do we have on the slides. Okay, cost of goods sold. Okay. If you look on the bottom of page 773, the bottom of page 773, you will see some formulas. Okay, you will see some formulas, and that's what we just did. We did those formulas, all right? And then on the next page, you have another formula. You have a total of 3 steps to do cost of goods manufactured. 3 steps. You see those? And then cost of goods sold, you have a formula also on that page. Your beginning inventory finished goods plus cost of goods manufactured equal available for sale minus ending inventory finished goods. That will give you cost of goods sold. Alright? If you were to find the unit cost, then you would have to divide the total manufacturing cost by how many units was sold. Or, sorry, total cost of goods manufactured. So if you look on
You have the cost of.
look at computing product unit cost on the next page.
The cost of goods manufactured divided by the number of units produced.
Yes. Now, what are these costs that you see there? Is this cost of goods manufactured or manufacturing costs?
Cost of goods manufactured.
Those are 3 things.
This is direct materials cost, direct labor cost, and plus overhead cost. That equals your cost of goods manufactured.
No.
No, it doesn't. It equals your.
Equal your total manufacturing costs.
Yeah.
Total manufacturing cost divided by number, yeah. So that would give you cost per unit. Or you could divide each one of these separately, this and this and that, and then you add the results. And with the same thing, yeah. Okay. So how do we, what are the methods that we, the methods of measuring costs? Okay, the product cost measurement methods. Product cost, and how do we come up with a cost? What kind of methods we use to come up with product cost? There are 3 methods. Okay, there are 3 methods. You have the actual costing method. Okay, and then you have the normal costing method, and then you have a standard costing method. Okay, three methods: actual, normal, and standard costing. Three methods. The actual method, the difference between the three is mostly in the actual is that you wait until you finish the product, until you finish manufacturing, and you look at what the actual cost was. The normal, the difference is in overhead. Okay, you have to estimate the overhead. You don't have it. In the actual, you have to wait and you figure out what is the material that was used, what's the overhead used, and then you do your total cost. But in the normal, you don't. Normal, you have to estimate because you don't have time. Well, it's illogical to do a budget, for example, or to come up with a cost for your planning and decision making, or for your budgeting. To wait until the product is done, there's no need to do a budget.
Yeah. And budgets for how much you can use to make the
Yes, so you have to estimate the overhead, and that's the normal costing. You have to estimate the actual costing. You have the actual material, the actual labor, and the actual overhead. But the normal, you have the actual material, you have the actual labor, but the overhead is estimated. It's not the actual overhead yet. Okay. Under the standard method, you have to put some kind of standards or some kind of benchmarks for you have to estimate your material, you have to estimate your labor, you have to estimate the overhead. The three of them are estimated. You set standards for the material you're going to use, you set standard for the labor that's going to be incurred, and you set standard for the overhead. What did you hear something?
like a snake.
Man, that sounds like a rattlesnake.
Where?
Like back there. Like I heard it go for years.
That's outside.
Are you sure? It's already go for that closet.
Go check. Don't do that.
No, I'm not going to look, but no, listen, I hate snakes.
It's coming from over there in that corner.
There's birds outside.
Are you sure? I don't sound like no bird.
Hey, nah, that last one did kind of sound like a snake.
It sounds like a snake.
Like it started like a rattling. Then
Yeah.
it gets like.
How did that little tail around like that?
They got something inside.
I tell you, one day I went to check the air condition, and then I opened it and something moved. I saw a tail move. I thought that was a snake. I mean a rat. And when I
actually saw a rat.
then I closed it right away.
My first year ran across the it was like right there by the flag. We ran across the flagpole towards the boys going.
You sure sounded to me like birds outside on the trees. All right, we're not going to open it.
Super slime.
We're not going to open it. Maybe once we finish, I'm going to tell the maintenance people to check it out. So if you're probably right. So anyway, so you see the difference between the three methods of costing. The standards, you set a standard for, and then as you go along, Dr. McDonald, we heard something a minute ago.
You heard that snake too?
What snake?
And that, you're afraid from snakes now?
Snakes and rats I don't deal with.
They heard
Snakes and rats.
I was thinking birds on the trees that making sound, but they're saying that sounds like a rattlesnake in there.
What is a rattlesnake
Was
in there?
that's what they, I don't know. It
That's
sounded
what I
like,
heard, but I'm not gonna
I
show
was
you.
gonna sit down in here, but I think I'll sit over there.
anyway, so as you go along, you do, while you are using your materials and using your labor, you see if you are within the standard that you set. So sometimes you go over what the standard you put, sometimes you go below And of course, you want to go below, especially if it's material used. You try to save as much as you can on the material. So if you do less than what you set as to, that's really good. The labor and overhead, all the costs. If you perform below the standards you put, it'll be really good. But if you're going to put standards for your revenue, the higher the better for you. But for your cost, the lower the better. So these are, so the actual costing, you have to wait until you find actual costs, actual labor, and actual overhead. That means the product has to be finished first. And that is very unpractical. Because you need to do your budget, you need to do your costing right now. So which one of these three you think is the best one? Standard, nominal, or actual?
I think it's the nominal one.
I agree with you. Nominal is the best, yeah.
The normal one?
Nominal, normal, no, it's normal, sorry. Yeah. Normal is the best one of them. Yeah, because you is more practical. You have to estimate your overhead and do your budget, yeah.
Whoever do the actual cost method, their books must be all jacked up.
I mean, I don't know if somebody uses really the actual costing. You gotta wait until the product.
I think they use two. I may be wrong, but I think they use both of them when they show the report. They do like an audit almost.
Uh-huh.
And they show the projected budget, and then they show what was actually achieved.
Yes.
And so that they
And-
show both of them.
Okay.
I use all three, me.
And
I use the actual.
that's at the end, once you do your analysis, if you are overestimated your costs, for example, you have to take it out, that difference.
I use the actual to set my budget for like next quarter. You know what I'm saying? Like, cause like that'd be good numbers to go off of after production is produced. Like you can go off that now, but now you won't use it for the books you're doing now, the actual method, but like for the next quarter. You know what I'm
That's
saying?
what, yeah, for next
That's how
quarter.
you go off how you
But-
make a budget.
If you overestimated your costs in your budget, what would you do with the overestimated amount?
I'll
Well-
put it back. Well, I'll put that money somewhere else. I guess, like somewhere else into the kind of like in I guess into more into when I'm making goods.
Well, businesses usually cut that out of costs,
They cut.
cost of goods sold, yeah.
Okay.
And what happens if you underestimated your costs? Then you have to add the difference.
Or go to
Your
a line
costs.
item budget.
Yeah. Okay, yeah. You go pick specific item and increase it, yeah. If you underestimated, yeah.
It's kind of like at my job, like going to the bank. Like if our deposit for the day, like if our register is like under 1,500, we have to add on to our deposit, or if it's over 1,500, we gotta take away from our deposit before we go to the bank, like something like that.
Okay. Well, you are a manager. You are comparing your practical, real experience with that. That's the advantage. Yeah. Well, that's the end of chapter 17, and then one section left is the ethics. You can read that on your own, the ethical standards. But you're not done yet. The balance of the time, you're going to work on chapter
15 and 16.
15 and 16. Do you have other chapters that you want to turn in?
No, so I gotta start on them.
Okay, and so start on the ones you gave me 14 and 15.
14. I gave
14.
13 and 14. I gave you those.
I have 13 from everyone.
No, I gave you the rewrite.
Yes, sir, I got it. Yeah.
Yeah, I just gave it to you and 14.
Well, yesterday you gave me the rewrite.
No, you.
Oh,
gave
that
me-
was me.
Okay.
Yeah.
Well, I have them
Cause see,
anyway.
look, I was
Yeah.
like, did I turn in my 13 yesterday? And I thought, oh yeah, that was me. That
All right, work an extra one for the balance of time. Don't leave yet.
Okay.
All right, let me stop the streaming.
Are you able to stream?
Yes, sir. Stop.